All right, welcome to the 5 a.m. grind. Harris, what's up, man?
Nothing much. What's up with you?
It's good. It's good. Did you hear Facebook changed their name? Well, it's now called Meta.
Yeah, I know. I think you're the one. I heard it on passingly on TV.
Yeah.
In the news, but I didn't know until you really brought it up.
Yeah. You know who else? Remember Meta World Peace, Ron Artest, the basketball player?
No.
Yeah. So apparently this is Zuckerberg's attempt at reorienting the company to this new future in the metaverse, so virtual reality, augmented reality. He's making a huge bet on those businesses.
Yeah.
And I guess he wants to distance himself from everything that's made Facebook so shit as well.
It's ironic how these big tech guys are putting everything into that, whereas you see China, they're banning how much the kids can play video games.
Yeah.
They want them to stay away from that. It's two very different perspectives.
Very different perspectives, indeed. It'll be interesting to see how it pans out.
Yeah.
Anyway, so for today's topic, I wanted to discuss something that's been on the news for quite a while now. That's really supply shortages.
Yeah.
And then just wanted a quick update on inflation as well. We've covered inflation on the podcast before, but just wanted to do a quick check-in because, Horace, especially you, are in the real estate business. You will clearly care where interest rates go because I'm sure it sort of has some knock-on effects in your business. Yeah. But it's always good to talk about the economy in that regard. So wanted to cover 4 questions. Number 1, we'll revisit that question about inflation. Is inflation transitory? Number 2, what would be the repercussions of higher inflation? Number 3, what is happening to the supply chain? Wanted to focus the bulk of our time here. And number 4, what does this mean for the economy? Okay, so number 1, is inflation transitory? Apologies for ruffling papers here. Horace, I wanted to show you something. So here are the inflation numbers, Canada and the U.S., whoever you care to see. Okay. So we're hitting records in multi-year records, right? You can kind of see, I'm just showing Horace monthly inflation. I only have 2017 to now, but whatever. You can kind of see 2%, 1%-ish, and now we're consistently hitting 3, even 4s, right? In the U.S., it's actually even higher. We've been hitting 5s for the past 4 months.
Yeah. I would argue that these numbers are artificially low.
You think the reported numbers?
For those who can't see, I think in 2020 we're hitting less than 1%, and then around July or August of 2020, it's
2021.
Well, 2020 is going up above 1%.
Yeah, correct.
And then 2021 we're hitting above 4 or 5%
in the U.S. Yeah, Canada, very similar story, maybe slightly behind the U.S., but very similar. Funny enough, we did have negative inflation in March and April 2020, May 20. This is the depths of the pandemic, right?
Yeah, I think our lockdown was much more cruel
than the U.S. was. Yeah. I mean, in the U.S., there were modified versions of lockdowns and stuff. Quite interesting. Yeah, but so interesting to see. The other thing I wanted to bring up to your attention, wanted to get your perspective on this, is closely related to the inflation problem is a bunch of things happening just in the supply chain, right? So in China and other countries where North America usually sources their goods, the rolling shutdowns in factories because of COVID cases, in ports because of COVID cases, and this is causing a knock-on effect in the entire global supply chain as goods are now delayed. Demand is back because a lot of consumers stayed home. They didn't buy stuff. Now they really need stuff, and they keep buying stuff. I guess a lot of the white-collar workers as well are still working from home, so they have extra savings. So the demand is here. Yeah. Supply is struggling to keep up. In the U.S. as well, some other statistics for you. There are 8.6 million people that are considered to be out of work, but 10 million job openings. So now you've heard this, McDonald's, Walmart throwing bonuses, increasing wages, stuff like that, just to get workers. And I'll say this on the wages, and I heard this from Chamath Palihapitiya's podcast, the All In podcast, and he was saying, if you think inflation is transitory, okay, but could you tell a worker once you've bumped up their salary to $20, okay, now guys, we're going back to 14?
Yeah.
That's not something you can adjust.
But I don't think it's transitory either, though. But yeah.
Yeah. So I mean, that lends to the argument you made that it's like clearly, like wages are going up, and if that's happening, there is inflation in the economy. Someone has to pay for these higher costs. Eventually, it's going to be the end consumer.
Yeah. And I wouldn't agree with, can you tell people to go back down? Yeah, you can get salaries to go back down when there's a depression, when there's like less jobs. That's prices readjusting downward, right? Mm-hmm. That's what it is. Like things have gotten too hot, and now things have to cool down.
Yeah.
And so then people reorient themselves. Things get cheaper and all of that, but we're not allowing that to happen.
Yeah, yeah. I don't know. I'd say wages are also sticky. Like, when they move up, it's hard for them to come back down.
I would say the $14 an hour wage, I would argue, is not sticky. Mm-hmm. That there's turnover there. I would argue, I would have argued like more like white collar, more nuanced jobs are sticky, but they've always been sticky though.
Yeah.
Like inflation, no inflation, you have to pay the price for somebody who is very specialized in a certain domain. Mm-hmm. And in order to get that person in, there isn't that many people around, and it's always based off of how easy like the supply and demand for that talent is.
Yeah.
Before McDonald's and stuff like that, I mean, that labor pool is relatively larger. Mm-hmm. I just feel like the reason prices are going up is because there's just been a lot of, I guess, government assistance. Yeah. So people don't want to work. So once that goes away, automatically I'd feel like it's going to come back down.
Mm-hmm. Mm-hmm. Interesting. Nice. So we've sort of established that inflation maybe is not so transitory anymore. There are clearly factors that
I would say, so there's a few other things too, though.
Yeah.
I feel like if you look at like port in LA, San Francisco,
yes,
they have enough ships that are just waiting out in the sea because you can't empty them, right? So to say that there's a lack of like supply, I feel like, well, I mean, if there's a lack of supply, then there'd be no work at the ports. Right now, they're saying, in a lot of cases, it's cheaper for the ships to go down to the Panama Canal, go around and come back up to the other side on the east coast of the U.S. and dock there.
No way.
Yeah. So that's why, and that means that there's a severe labor shortage.
Yeah.
Okay. It's not that they're saying, like, I think even these ships have to be docked out there for 6 months or so, just so that they like are in line, and then finally they can get their turn and be unloaded. So I don't there may be some shortage of supply, but I don't really agree with that 100%. I feel like in certain areas, there has been a lot of areas that's showing that there's just people aren't willing to work because of the handouts. I do feel that at the same time, this inflation number, the reason why it was artificially low in the States before is because there's also substitutes, right? So like, let's say your basket of goods where they're measuring inflation used to have steak. Mm-hmm. Steak prices skyrocket. So the argument is, if the price has gone so high that people aren't buying steak anymore, so people are buying chicken, and that's kind of replacing the old steak. And so, but chicken's half the price, and now you've replaced a $10 item, hypothetically speaking, with a $5 item. So now you're kind of suppressing inflation. What happened after that is you can only substitute so long for so much, And when you can't substitute any longer, they had to keep the basket of goods the same, and now they've printed out, like, you have to think of it this way. What is it, 50% of U.S. currency circulation is printed out in the last 12 months? Right?
That's messed up.
Yeah. And it's a reserve currency. This inflation is too low, I would say.
Yeah.
All right. We should be looking at like 2x within a short period of time of everything, like just doubling in price at a minimum. Yeah. And that reserve currency is going all over the world, right? So it's like, I think Bank of Canada recently announced that they're going to stop doing QE, but I don't think it's up to them because the U.S. is a reserve currency and it's accepted everywhere. They're forced to print money because Canadians have the objective of having like just a weaker currency so we can export more, right? And so they want to keep it in line. They don't want the Canadian dollar getting stronger than the U.S. If we hadn't printed, we would have been much stronger.
Yeah.
Right. So because we're printing as well, we're doing QE. to kind of have that balance and preserve our export market above all else for whatever reason, I think we're having inflation. But this inflation, the reason it's not transitory is because a lot of people are like, oh my God, it's because everything closed down and now it's opening up. If it closed down, right, and things like were kind of going to a halt, you'd have a deflationary period before you have an inflationary period going back to norm, and that's kind of the transitory inflation, right? But if you had like nothing, right, and even of our dip of like what 0.22%, I don't think that's huge, right? Compared to the gains that we're getting now consistently, it's like it's nothing.
Yeah,
it's absolutely nothing.
Yeah. The other thing I was gonna say, which you mentioned this about the basket of goods, and this is why I hate inflation sometimes. Housing's not included in these numbers, which is the most
energy.
It's the most stupid thing because like a household, 30% of a household's income in Toronto, at least 30% goes to housing. Right. And whenever you're the bank account and you're saying, whoa, we're not seeing inflation. Well, dude, like housing prices are going nuts. Like that is where the inflation is happening. People are spending their money on housing. Like how do you not monitor that? And you go, no, this basket of goods that we have of chicken and steak isn't going up.
And 30% is for, I would say, the privileged individuals who own their homes.
Correct.
Right?
Yeah.
A lot of Canadians who are not. I think this is not even now. It was like I think 2018 or 19, where they were saying over 50% of income was going to rent in downtown Toronto for these condos.
Yeah, it's messed up. It's messed up.
So if that goes up, man, that's a huge chunk.
Yeah. I wanted to did want to move on to question number 2, the repercussions of higher inflation. So right now, I think the Federal Reserve in the U.S., the Bank of Canada here in Canada as well, both of them have conceded that, hey, inflation is this is a little bit scary. It's getting out of hand.
Yeah.
Like you said, both of them are sort of scaling back their QE programs, and they've sort of put a timeline to end them as well. A lot of people are expecting the central banks to start increasing rates in mid-2022, both the U.S. and Canada. I just did want to show you as well, just interest rate paths, since we graduated 1.5. Now it's at like 0.25, so financial crisis levels.
Yeah.
It's kind of insane.
Yeah, I don't think interest rates are going back up, though.
So how are they going to deal with the higher inflation, you think?
I think we are looking at the problem like completely in a very kind of I would say in an inappropriate way.
Yeah.
Everybody seems to be monetizing the economy, and you're looking at, okay, well, what's the interest rate? What's money, and how much is it worth? And you're looking at exchange rates. In reality, I would argue, and this is where I would say even the bigger investors are looking at, you have to look at hard assets. Okay, when you're looking at the same house going up 50%, it's not the house that's gone up in value. The amount of enjoyment that you get from the house is the same. It's the worth of that currency that's gone down. Mm-hmm. Okay, and essentially, it's the worth of your time that's gone down.
Yeah.
Okay, and the reason the worth of your time has gone down is because there's a lot of money being printed, and money is supposed to essentially signify time. Right, $20 an hour. It's not. It's $20 that you're monetizing an hour somebody has spent to bank for some kind of receipt. Now you can go present it somewhere else to get something else instead of bartering. You're kind of monetizing your time and then going in. It's supposed to be more efficient. But then when you monetize it and then you're printing it, you're essentially printing money out of nowhere, which is you're trying to create time out of nowhere. But there isn't enough production on the back end to justify that. And as a result, everything, like the value of everything goes down. So essentially what we should be looking at is output, okay? What is the output of Canadian and American and Western economies? It's going down. It's going down. And the Chinese, the production, the hard assets, it's going up, right?
Yeah.
And I think there's a rebalancing as I think the West tries to hold on, and I think the coronavirus and the way it was dealt has, I guess, it's a bigger blow to the economy because everybody was in a privileged state and because it was like there was, okay, well, let's print money and let's try to save the people who are more vulnerable. I agree with that, but at the same time, you have to understand that as you're doing that, you're printing stuff and you're making the entire economy less efficient. Whereas in China, they helped everybody, as in they closed everything down and then they got everything back up and they're producing as much as they can, right? And production at the end of the day is what's going to determine the future of an economy, right? It's not like what your dollar's worth and whatever. If the metrics for that is right, it should indicate what the production is on the back end. But because it's so disconnected, now you don't know, like this inflation and all of that stuff, it's not connected to the production and the goods and all of that on the back end to accurately predict what's going to happen with the economy.
Yeah.
I don't know. That's my 2 cents.
Got it. Got it. Thanks. But do you think, so I'm going back to my question. Do you think they'll raise rates or no?
No, I don't think so.
Okay.
I don't think they can.
Yeah. So you think their hands are tied because what? They have a lot of debt?
There's a lot of debt. There's also
just government debt that they if they raise rates, it'd be a lot of money that the government takes in would have to go to service this debt.
There's that. There's also, I mean, as soon as you raise interest rates, the value of bonds is going to go down. Mm-hmm. Right, the value of houses is going to go down.
Correct.
A value of like a lot of these assets is going to go down. The value of businesses is going to go down.
Yeah, stocks.
All right. So a lot of the huge portion, more than people would think, of the economy is made from this friction, right?
Yeah.
Of buying and selling, right? Buying and selling a house. Every single time the interest rates dropped 0.25%. Do you know how many people were involved in like maybe cashing out or an economic exchange? Because when an interest rate went down and the value of the house went up, maybe you went and sold your home. You sold your home, that means that there's a realtor involved, there's lawyers involved, there's a mortgage broker on the purchasing side involved. If you refinance it, again, there's lawyers involved, there's banks involved, there's mortgage brokers involved, right?
Yeah.
Every single time it drops, you have so many people coming in. And then once you refinance, okay, well, now that those more expensive kind of interactions are gone, you also have people who have money now that are going to go buy goods and use their house as an ATM.
Correct. Yeah.
All of that dries up. So that's why, like in the States, I think, what was it? I think there was that threat of interest rates going up that just dried up the mortgage market overnight.
Holy cow.
Yeah.
That's
so
nuts.
the refinances just they bottomed out. They were like, what the heck's going on?
Yeah.
This happened over the past week or so. So as soon as they talk about increasing rates, the economy just slows down. It slows down. That means that there's not enough people starting businesses. There's a lot of other stuff that can happen, right?
Yeah. No interest.
Not about doom and gloom. It's just about like assessing the economy properly so you know where to stand.
Yeah.
When you're kind of moving forward.
Yeah. No, understood. I did want to spend the rest of the segment just covering questions 3 and 4. That is, what is happening to the supply chain and what does this mean for the economy? We sort of covered it in the earlier discussion, but maybe we can focus on it now. So supply chains, like I mentioned, we do have issues going on in Asia in terms of just COVID factory shutdowns, people shutting down ports because of COVID cases. There are flight reductions, so air cargo, not as much like business, like cargo that is usually used, inventory and what have you, equipment that is used in businesses isn't going around as much. I'll give you another stat. I do have a few e-commerce clients in my accounting practice. Literally everyone I've spoken to has complained about this. That's increased shipping costs because now there is a backlog. Like you mentioned, in LA, there are 80 ships sitting to be offloaded. So that means there aren't enough ships back in China. So if you want to send your goods from China to here, it costs way more because there's less space. Right? So just to give you some...
less space and you get it later.
Yes, less space and you get it later. So like just to give you an idea of some costs, this is reported from the CBC. Some clients' shipping costs were $2,500. Now it's $25,000, so 10x. So you can imagine what this does to just margin... pricing, things like that. Like you have to pass this on to your consumers.
Yeah. I remember in 2008 when the market was getting really heated, 2007 I would say.
Yeah.
And people were complaining that containers were $8,000.
Okay.
So now I think I mean, all the numbers that we thought were extreme leading up to the '08 meltdown are all gone. And it's just like, that's like nothing.
Incredible.
Do you remember, like, sorry, not to cut you off, but yeah, the TARP, was it TARP?
Yeah.
The bailout bill in '08?
Yeah.
$700 billion.
Yes. And that was a lot of money, yeah.
Now they sneeze and they spend more money.
Yeah.
And $700 billion.
What, a few trillion?
Yeah, it's like each time you have to like up the dosage, right?
Yeah.
It's like a drug. So the more you use it, the more you need it.
Yeah, no, it's
completely
completely messed up. Yeah, so supply crunch happening in the economy. Like I mentioned, there's the wages, just the imbalance between the number of job openings, the number of unemployed people. So there's that as well, causing companies to increase their wages. So I'd say, yeah, in conclusion, really 3 problems. Transportation costs are up, wages are up, energy pricing recently is going up too, simply because, green energy is just not there yet. So people still need fossil fuels, and prices for energy are also going up. So you have 3 things coming together affecting the supply chain, which is pretty interesting, all at the same time.
What do you think is going to be, what is your prediction of the economy the next 12 months?
Next 12 months?
Yeah.
I don't think this is going to be resolved. Like, a lot of people are saying a lot of this shortage stuff is going to continue into 2022. Okay, yeah, well, actually, here you go. Just came to mind. Apple released earnings yesterday, and Amazon as well. Both of their revenue numbers were below expectations. I mean, the company still grew, but I think Apple said they reported whatever it was, 43 billion this quarter or something. They said they lost 6 billion as a result of chip shortages and other supply issues. They said, if we didn't have these issues, our revenue would be $6 billion higher, which is absolutely nuts. No, I do think this is a
chip shortage is real, but also you showed me that. This is more rich people problems, but not that we're at this level. But the Mercedes that you showed me.
Oh yeah, there was that too.
G63.
Yes. Yeah. So actually, for the benefit of our listeners and viewers, so if you just look at some of the car prices as well right now, Horace and I were just looking at the price of the G63, the Mercedes that looks like a box, the Jeep that looks like a box. So, and you have some context on this too, but we were looking at prices at a dealer. That car usually goes for $250, the high-end model.
Yeah.
Right, $250. A lot of the people that bought it last year can actually sell it now, this year, so used car, for more than what they purchased it for. If you're actually going into a dealer to buy this car, normally costs $250. Dealers are now adding a premium of $125,000 on top of that. So you're paying close to $400,000 for this car.
Yeah.
Right? And I believe you know this, Mercedes isn't making the car this year?
No, they're not. They stopped because it's chip shortage. That just cut down supply.
Right.
So this was not like a volume player. And I guess you have to start focusing in on these small SUVs or whatever.
Yeah.
And they stopped,
That's completely messed up. The other thing I heard as well, again on a separate podcast, they were saying that Ford, for some of their self-driving features in their cars, they have them in some cars, right? For the models that are coming out next year, 2022, they're actually removing that feature because they can't provide it.
To reduce the number of chips going into the car.
Yeah, exactly. How messed up is that? It's like last year's car model is actually better than the current year's model.
No, I went in because I was like, okay, I wanted to trade in my car. I was like, let's see if I can,
What car do you drive?
it's an SUV, but yeah. So it's like I went into the dealership. I went to the dealership and I'm like, okay, this is my car. And they were giving us an all right value, right? I didn't think it was going to be that value. But then when it was time to buy, because my thinking was, okay, if my car is worth X amount, it's going to depreciate within 2 years back to, I'm hoping, pre-chip shortage values. So the depreciation is going to be harder the coming few years. So I figured, why not just get a new one and have that depreciate instead of this one. So there's nothing wrong with my car. I love it. And I go in and they're like, okay, well, you have to order the car now. You're going to get it March, April of next year, maybe.
Yeah.
Right. And then you cannot order anything, like, because I was like, okay, do you have this? No, we don't have any of that. This is what you can get. Right. And there was absolutely, I mean, the dealership that I go to, they don't really negotiate to begin with, but they'd give you something off, but there was absolutely nothing off. They were just like, all right, just take it and leave it.
Oh, wow.
They did not care.
Yeah.
They were just like, listen, like, there's no room for negotiation here. I don't even want to have this conversation.
Yeah.
And I think we went that same dealership, I think it was 3 months ago.
Yeah.
Like, my dad went and bought a car from the same people, and they, like, had enough in stock. They negotiated a half-decent deal. Everything was very nice. Like, I was very pleasantly, like, you know, like, I appreciated it, which is why we went back. But now they just don't want to talk.
And this is 3 months ago?
This is 3 months ago,
So that means the problem is getting worse.
It's getting worse, yeah.
That's messed up.
3 months ago, the issue was the dealership that we went to, like, and like, so there's, like, a few dealerships across on Toronto. The dealership that I had originally bought my car for the same manufacturer was different. They didn't have any kind of volume. Yeah. Anything stock. So this one dealership had a lot of stock. So we figured we'd go there. It was a new dealership too. Nothing else in Toronto had any kind of stock. But when we got there, we found out that, like, because there's different specs in a car too, right? Like, a same car could be 50,000, same car could be 150,000, right? With the specs nowadays. So all the cheaper specs were gone. They didn't have any of that. All of the specs that were more premium was only when they're like, this is what we've got. We've got a lot of volume, and we could give you a bit of a deal, but that's it. So we kind of stuck to that, and now they don't even have that.
Holy cow, okay.
They have, like, pretty much, like, they're like, okay, well, if you want something, like, you can like, order now, and you'll get it, like, next year.
Yeah. And here's the thing. They told you what, March, April, they said you'd get your car. I bet you wouldn't get it by then because they would extend that deadline.
Yeah.
Right? Because I ordered recently like the new Apple Watch and the new Apple MacBook Pro, like the crazy computer. I had a shipping date of like mid-November. That's now been pushed back to the end of November.
Yeah.
Right? So everything, like, even if you think you're going to get it by a certain time, I bet you that timeline is going to be pushed out.
Yeah. No, I wouldn't be surprised because I think that the sales guys needed to get sales in. They're trying to make money, but they got nothing to sell.
Right.
So they're trying to book in the future so they can get there. I mean, obviously, everybody's got to
live. Yeah.
So they're trying to get their commission in, and even if it's pushed out a month or two, then. But I was like, yo, man, it's okay. You keep that. I love my car. Peace out.
I'd rather not do this. Yes, completely messed up. So how do you think this whole, like, how does this resolve itself? Do you think it's just a matter of supply catching up eventually? You think it'll normalize like people are saying in 2022? Are we always going to be chasing?
I think prices are going to go up. I think that in general, like in Canada and the U.S., everything's been really cheap. Okay, it's been cheaper relatively up here because of our friends to the south. But
I don't know. I feel like we pay up a lot. Canadians do.
I mean, we do, but we don't pay nearly as much as the rest of the world. On a lot of things.
Yeah, no, it's
right?
true. It's
like
true.
If you go to Europe, man, they're looking at all these cars. They're like it's twice as much. So we're not nearly as. I'm not saying we're as cheap as the States, but that's our luxury. We look at them, we're like, oh my God, it's even cheaper. But if you look at the rest of the world, we're pretty cheap.
Yeah, it is expensive indeed. Yeah. I mean, we'll see how this gets resolved. Interesting stuff. Very interesting implications, though. Very real world problems that we're dealing with right now. Yeah. All right, we hope you enjoyed this episode, just us rambling about our thoughts on just the supply shortages and inflation. Episode. Yeah, we'll see you guys in the next episode.
Take care, guys.
Take care.